Hello traders and welcome to another video review. Today is Monday, October 17th, 2022. We are starting new trading week, so let's find out what's going on the Forex calendar. As you can see here, we don't have plenty data scheduled for release today from the during the London session from the various countries. However, some data had been published already. We got data from Japan. Industrial production has increased from 2.7% to 3.4%, just as beating the expectations of 2.7%, which was in line with the previous month. Industry Activity Index increased to 0.7% as well. So we will have to take a look at the Japanese yen during the technical part of our review. We have some speeches here during the London session from the ECB officials. The Guidos will give a speech as well. However, that's the one and only any kind of event that might trigger some kind of market moves. During the London session, New York session, we have London session and New York session overlaps. We have a New York Empire State Manufacturing Index data from the US scheduled for release at 2:30. At 4:30 we have Bank of Canada's Business Outlook Survey. Then at 5 p.m. we got ECB Lane speech, so another ECB official will give a speech today. At 8 o'clock sharp we got a federal budget balance from the US. Then we have a speech from the German BUBA president Joachim Nagel. And of course then at the 10 p.m. we got a speech from the Bank of Canada Rogers. So the most important data is from the New Zealand today, and this is quarter to midnight. Those data are CPI indices from the third quarter. As you can see, previous reading was 1.7%, forecast is 1.6%. So we will definitely take a look at the New Zealand dollar today during the technical part. So let's start with the euro, because we got plenty of ECB speeches and euro dollar, of course, and the data from the United States, and then we will take a look at the yen and New Zealand dollar. Euro dollar 4-hour chart looks, as you can see, very bullish. Recently, bulls made a big bullish engulfing pattern here on the 4-hour chart. Momentum broke to the positive zone. The rally was capped at 9,811, which is just below the 50% of the Fibonacci retracement, 9,819. Couple of pin bars had been made. Then the pullback towards the 30 periods moving average around 9,710, 9,720. And as you can see, the market is ready for another upside movement. So what is going on here, in my opinion, is that we finished the wave A. Now we are doing the wave B. Wave C to the upside is possible. So let me just show you the wave and change the color to the to this small. There you go, to this small labeling. So this is the outlook for the euro dollar. The majors should rally higher towards 61% of the Fibonacci retracement. 9,863 is the target for the euro dollar. First target for the euro dollar. US dollar to the Japanese yen. Let's see what is going on there. And please notice that I will change the time frame to daily, just to show you the context. So the context is that we have a 5-wave advance, 5-wave impulsive cycle to the upside. Wave 1, we got wave 2, wave 3, wave 4, and now it's a wave 5 to the upside. The target is the target for the wave 5, of course, is, as you can see, located between 149 and 18 and basically 150, right? So this is that orange or maybe brown kind of a beige rectangle. Okay, so we are almost there. The recent high was made at 148.87. So we are only like, maybe 40 pips away from the target, and that might be the end of this 1, 2, 3, 4, 5 impulsive development on the US dollar to Japanese yen on the daily time frame chart. However, please notice that the wave 5 might be extended because wave 3 is made of the 5 waves when wave 1 is relatively short. So one of these waves might be extended. The odds are high that the 5th wave is extended. So this target is a classical orthodox target for the wave 5. Okay, but wave 5 might get extended. If we break above 150, then I will present the extended targets for the wave 5. For now, we are waiting for the wave, for the rectangle to be hit. Momentum, strong, positive, is already into the extremely overbought conditions, right? But as you can see, there is bearish divergence between wave 3 and potential wave 5 high. There's divergence right now, and of course the momentum indicator. So pretty good area to complete and terminate the 5 wave impulsive rally on the US dollar to Japanese yen. So that's the US dollar to the Japanese yen. Let's find out what is going on the New Zealand dollar. Data are scheduled for release at quarter to midnight, so we still got plenty of time to prepare for it. This was, of course, the recent bounce. The recent bounce was like a 4.50% more or less, like here. So in line with the previous bounces, and this bounce wasn't that big as the last one, 6.72. So what does it mean? Let me just show you the daily time frame chart in the context of this 30 periods moving average, this orange trend line. Okay, so this is of course the downtrend. Keep downtrend that is being continued. That's what I meant. This is the correction. It was the correction. This was the correction, and this recent move to the upside was the correction as well. We've made a new swing low already. The low was made at 5,507. However, please notice the fact that we are still trending around this old trend line. However, it's been violated so many times that it's about the time to move our trend line a little bit higher. You know what? I will make it a little bit more interesting. So I will make a channel, because I think that we might be moving, there you go, inside a channel, and now it's clear. We are moving inside the channel. This is the downtrending channel on the New Zealand dollar to the US dollar. This was the recent swing low. Okay, this is the technical support around here. So let me just change this of course this color of these two levels. The levels are 5,469, 5,565. This is the technical support, and of course they create a zone, the potential demand zone for bulls. This zone, as you can see, is made into the extremely oversold during the extremely oversold market conditions. The let me just take an arrow. The market is going lower, and these conditions, as you can see, are going, there you go, a little bit up. Okay, this is bullish divergence or positive divergence, which means we should expect some sort of the correction or maybe pullback on the New Zealand dollar again, right? So maybe it will be bigger than 4.5%, maybe not, we will see. However, the situation is that the recent low 5,507 might be the last low in that sequence. Okay, so what we should expect of, we should expect that there will be an event, a trigger that will of course start the market to move a little bit higher, a little bit up. Where is the target? Of course, 30-day moving average. However, there's a very interesting area between 5,723, 5,731, And then of course the local high located at 5,808. Okay, so that's the nearest target for the bulls. Then of course 50-day moving average, and then eventually two other technical resistances: 5,841, 5,920, and 6,054 pips. Eventually this one is the target as well, but that bounce would be at least I don't know, maybe even 10% or something like this. Let me just take my where is that? There you go, price edge. If that's the low, so the rally would be, there you go, around 10%. There you go, 999, 997, 10%. So very interesting setup here, very interesting price behavior, bullish divergence into the extremely oversold market conditions, into the lower channel line. This market is waiting for a trigger to pull back or to correct even 10%. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.